I really want to talk about this Bitcoin momentum today, even though we are pulling a little bit back. What happened overnight, we really have to talk about. And that is, remember I said to you yesterday that I wanted Bitcoin to break above this level and close above the level. So we didn't break, we broke above the level. We never closed above this level. Now the reason you'll remember why I wanted this to happen was because I said, look, this is effectively a bear flag. Now, a bear flag takes you down from this level up to this level. And then what it does is it flashes you down all the way, and then you go down for the next leg. Now, to invalidate that, what I wanted to see was I wanted to see Bitcoin close. So listen, guys, if you're new to the channel, subscribe to the channel. If you're not already subscribed, otherwise, smash the like button. I'm going to bring you guys a lot of alpha. We're going to move really fast. I've got a lot to talk about. Primarily, what I want to do is I want to talk about this bull flag and when this bear flag and when it gets invalidated and what happens next. Now you'll remember that tomorrow we have FOMC, and it's quite a big FOMC. I'll explain to you why it's a big FOMC later on in the show. Even though we know for sure that Powell is not reducing rates. Powell's not going to reduce rates at all. Everyone knows that. There's a 99.1% chance that Powell's not reducing rates. It's a very big FOMC. I think Powell's got, this is the second last FOMC that Powell's doing. It's tomorrow, then the 9th of April, and then I think that after that the new Fed chair will basically take over the FOMCs. So listen, lots to talk about today. Let's get the show on the road, guys. Okay, so why are you putting a face? Is my audio working? Does everyone say no sound, no audio? Is there?
They might just have muted themselves.
Okay, is it? Guys, do I have sound? Give me a thumbs up if there's sound.
You'll hear on YouTube.
Someone says no audio, no sound. A lot of people are saying it. Sounds good. Some people are saying sounds good. Okay, well, sounds good. Then let's start. If it sounds good, let's start. All right, so the bubble's much better today. We have another sound is good now. So there's obviously a problem with the sound. We have a much better day today. As you can see, got green. We've got the momentum continuing. As I mentioned to you guys, we had the momentum continuing overnight. I don't know if you were watching, but I was watching, and we hit 76,000 overnight. Now, the reason why the 76,000 excites me. So, the reason why the 76,000 excites me is, number one, we've now had 8 green days in a row. Now, that you'll see later on in the show is a double-edged sword. It's a double-edged sword because 8 green days in a row hasn't happened for a long time. The problem is the last time that it happened, we flushed back down after it. So we'll talk about that in a couple of seconds. The reason why I like this momentum is because if you've been noticing what Bitcoin's been doing for the last couple of days, and probably the best place to see it is to look at the 1 hour chart of Bitcoin. And specifically the 1 hour chart for the last 10 or 11 days. So if you look at the 1 hour chart for the last 10 or 11 days, you see that we've been going up, and then we've been coming down, and then we're going up, and then we've been coming down, and we've been going up and putting in higher highs and higher lows. And that's exactly what the pattern that happened was. Now, if this pattern continues, or if this pattern repeats, then effectively, this is the pattern that's been happening for the last 10 days. You'll remember that we went into the weekend, I think it was around here, on Friday, we went in at like 74,000. Then we came down on the weekend all the way back down to 70,000. Then we went back up and hit that 76,000 on the weekend. If Bitcoin continues this trend, and that's what I'm watching for, that's my base case right now, is I'm looking for Bitcoin to come down, probably to hit somewhere around 73,000. And then I'm looking for the next high, which is above 75 or 76,000. So we are getting a lot of good momentum. It's the first time in a long time that we're actually seeing this kind of good momentum. At the same time, we carry on being the leaders of the store of values when it comes down to the war. So you can see that gold is, let's actually get a much more accurate picture. So let's get a much more accurate picture. Gold is, Bitcoin is up 16.6% since the beginning of the war. And right now, gold is down 2.84% since the beginning of the war. I did speak to you for a couple of seconds yesterday about why I thought that was happening. And the reason why I thought that was happening is, I think there's 2 levels of store of value, right? The first level is a store of value. You say, look, I'm trying to put some money into a store of value and I kind of just want to forget about it. It's like this thing that must appreciate and store value when equities when equities, etc. are threatened. But then there's like the real store of value. And the real store of value says this is when governments are collapsing. This is when you can't trust the government. This is when you think things are going to fall apart. Things like places like Argentina, places like Greece, where things actually fell apart. And there you're worried the government is going to start seizing assets or keeping assets for themselves. And that's when you need a real store of value. And that's why I think that Bitcoin's doing what it's doing at the moment, right? Gold was a great store of value when we didn't really need a store of value. You were kind of protecting yourself against money printing and that. But protecting yourself against like real situations like a war requires something that you can get onto a plane, put it onto put onto like a wallet or a USB or whatever your methodology is, and you can transport it in times of war like this. And that for me is what you call the real store of value. It's a store of value that you can take with you, that you can move from country to country. So that's why I think that Bitcoin is outperforming gold so much when it comes to store of values during the time of war, not during the time of increased inflation and stuff like that. When you're talking about increased inflation or increased money printing or dollar debasement, then you don't have your money in gold. But when you need like a store of value that you can actually like keep and travel, ask people that were in Ukraine last year, or not last year, when the war actually started there, and they needed to get their money out. Ask them how hard it was to get their money out. Ask people who lived in Zimbabwe, and there were a lot of people that lived in Zimbabwe and had to get their money out when the currency collapsed. Ask them what happened when they went to the bank, and the bank said to them, sorry guys, you can't withdraw your money. So that's what's going on. And so right now we are getting momentum. In fact, that's what I want you. I'm looking for the momentum trade. Why am I looking for the momentum trade, right? Because the momentum trade starts to create FOMO. I read this tweet, and this tweet said, if sentiment flips positive here, it seems like crypto has the most talk. Why? Because crypto went down the most, right? And remember I said to you that investing is like a pendulum. You go from overbought to oversold and overbought to oversold. It's a pendulum that just keeps swinging between overbought and oversold. Now, when you are on very, very, very overbought, you will go to very, very, very oversold. When you go to very, very, very oversold, then you swing back very fast. The further you push the pendulum, the further it swings back the other way. That's the nature of how a pendulum actually works, right? And that's what's going on here now. That's why they said, hey, look, if sentiment does flip, then you're looking for Bitcoin to get the most torque. How does a pendulum work? It goes all the way up, it slows down on the way up, and then it goes shoo. And as it goes down, it starts to pick up that speed. And that's what they're talking about, the most torque here. If Bitcoin starts to buck the trend here, and it is bucking the trend, right? Then Bitcoin becomes the asset with the most torque, with the most movement. And that's the important part. Now, they said if sentiment flips. I think sentiment is flipping, and I want to show you what I mean here. We're now outside of extreme fear. We were in extreme fear for 40 days, guys. We are now outside of extreme fear. We're going back into fear. If you look at the buyer activity, after heavy February selling, what you can see is that the buyers are starting to come back into the market. Now that's what happens. You get buyers, the buyers come back, they cause a short squeeze. Get the likes up. I see, get this out. Get a short. Help me get the likes. I see the ratio is still about 6-1. So the buyers are starting to come back. Part of that buying was obviously 𝗧𝗟𝗏. We know that was 𝗧𝗟𝗏. Actually, when I read this tweet, I was quite shocked. Did you know that 𝗧𝗟𝗏, and this is excluding his own personal stash. In other words, this is, Michael Saylor owns his own personal Bitcoin, and he also owns Bitcoin in MicroStrategy. MicroStrategy could surpass Bitcoin, IBIT, which is the BlackRock Bitcoin ETF. It could surpass IBIT as the biggest Bitcoin holder. So right now, the ETF has got more Bitcoin than MicroStrategy. But by this time next week, if he carries on buying like he's been buying, and he's been buying like a crazy person using the STRC, the stretch dividend of 11.25%, he raises money and he promises you a dividend of 11.25 or 11.5%. He will be the biggest Bitcoin holder. He'll be a bigger Bitcoin holder than IBIT. In the meantime, as I said, the momentum's shifting. We had another green day, so that's one. I think we've now had 1, 2, 3, 4, 5, 6 green days in a row when it comes to the ETF flows, which is very, very big. I think one thing that we need to look at here is why this is happening, and I think why this is happening is because the sellers are exhausted. And I think that that's what is happening here, right? The sellers seem to be super exhausted, and right now the buyers are starting to come in. So when you have a situation where the sellers got exhausted, the buyers are starting to come in, pretty much there's nobody selling. Now, one of the things that we have spoken about is how Bitcoin has diverged from all the other assets. So you've got Bitcoin going up whilst the Nasdaq's gone down, the S&P's gone down, gold has gone down, and that's not a phenomenon that happens very often. It hasn't happened very often. And so what we did was we actually ran an analysis to say, how many other times has Bitcoin gone up while the S&P, gold, and the Nasdaq have gone down, right? So we ran that model. We put that model into Claude, and 6 out of 6 times that it's actually happened, right? 6 out of 6 times that it's actually happened, what you see is that the median, so here we look, Bitcoin was up 8.3%, the SPX was down, the Nasdaq was down, gold was down. It's called the triple divergence. 6 out of 6 times that that's happened, 4 weeks later, Bitcoin's ended up 26% up as an average. So it's very good that Bitcoin's broken away from these assets. It's a very good sign that the momentum rally will continue. In the meantime, what Bitcoin is doing the opposite of oil. So if you look at what the oil chart is doing, every time oil goes down, Bitcoin goes up, and every time oil goes up, Bitcoin goes down. Which means, if you think about it logically, what it basically is telling you, when oil goes up, people think that the war is escalating, and they're taking a hedge against the war into Bitcoin. So oil goes up, every time Bitcoin goes up, oil has been going down, right? So you can actually see it here. So it basically says to you, when the war keeps escalating, oil price goes up, Bitcoin goes down. That's basically what happens. And this happens 6 out of 6 times. So 6 out of 6 times, whenever we had the what they call the triple divergence, where Bitcoin diverges from the SPX, from Nasdaq, from gold, every single time that has happened, we have had a rally. Sometimes the rally fades. So after 12 weeks, the rally fades. But actually, most times, the rally continues 12 weeks later and even 52 weeks later. So that's a very good sign for this increased momentum. And you can kind of see the breakdown here of exactly when it happened. First one was in so you can basically see all the times. I'm not going to go through all 9 or 10 of these or whatever this was. So I think the big question then becomes, how am I playing this? What's the play for me here? So am I buying right now? I think that's the big question that people are asking. How am I playing this? What am I waiting for? Do I think it's going to dump? I want to start off by saying that right now, the consensus view is that this Bitcoin thing is going to dump. And the reason why the consensus view is that this thing is going to dump is because everyone has PTSD. And you know what the market does when it believes that everyone has PTSD? It punishes the people that didn't believe in the market. Okay, so I know this because I've been in the market for a long time. The market has a lot of PTSD. They do not believe that Bitcoin can actually continue to go up, right? Everyone keeps saying it's going to dump. It's the midterm year. In the midterm year, you get this pattern where Bitcoin goes up into March and then dumps. Now, my base case is that I'm watching this flag. And right now, if we can break through this flag, and the level I said to you yesterday is about 75,000. If we can break and close convincingly above this flag, then my base case is that we're going to start moving up. If we reject here, then my base case becomes that we either do another one of these, in other words, come back down to this level over here, which is like 68,000, and then maybe try and attack it again, or we break down and we go all the way back down to the next level down, because you can see that basically the whole Bitcoin, you see, there's one of those flags over here. There's another one of those flags over here. There's another one of those flags over here, right? So what's my base case? My base case is that we break this. If we break this, then I want to show you something very interesting, because what you need to remember is that the market is a magnet for liquidity. And that means that the quicker that you lost liquidity on the way down is the quicker that you'll gain the liquidity on the way up, right? So then the question becomes, when we broke down below this flag over here, so you can see when we actually broke down below this flag over here, look how many days it took us. 1, 2, 3, 4, 5, 6, 7, 8 days. It took us 8 days to go from this level over here, which was 90,000. It took us 7 days or 8 days to go from 90,000 all the way back down to 61,000. My base case is that if we break this level over here, the same thing happens on the way up. And I don't know if it's going to be 7 days or 10 days, but what I can tell you is that it's a short number of days. If we break above this, we start to get the momentum. And exactly what happened on the way down is exactly what happens on the way up. 7 days to go all the way down, 7 days, 8 days, 9 days, 10 days to go all the way back up. If we break this bear flag over here. If we reject, then we go back down 66, 67, and then we basically come back up here. Now, question is, what could make us reject here? What is it that could make us reject here? So I think the first thing that you need to look at is, history. And history says that Bitcoin was up 8 consecutive days. There's only 15 times that it's done this before. One of those times was March 22. Now, the reason I go back to March 22 is because March 22 was a midterm year. It was a war year. March 22 was the Russia-Ukraine war. And that's when Bitcoin fell 60% over the next 80 days. That is one of the cases. So we could repeat that. We could have a repeat of 2022, which was a war year. It was a midterm year. It was March, as you can see. March 22 to 29th, Bitcoin went up for 8 days, 8 consecutive days in a row, just like it's done this time. And then it crashed 60% in the next 80 days. That is one of the cases that we need to be cognizant of. Now, my base case, and in fact, I'm not going to even try and predict what the market's going to do. I'm just going to say I'm watching it right now, which means that right now I'm not buying anything because this is like the worst time to buy. Because if you reject, you're going straight back down, and you're either going back down to here or you're going back down further. So right now, this is for me a no trade zone. If we break up above this, I'm going to show you exactly what I'm going to buy, okay? Because that means to me we're going straight back up, and then you want to be in things that are going to be good quality, right? Then let's talk about so this is that whole midterm year thing. Let's talk about levels if we do go up. So if we do go up, then remember I said to you, I think it's going to be pretty quick. But there are a couple of levels that we need to look at along the way. The first thing is there's a CME gap at 80 to 82,000. CME gaps get filled 90% of the time, right? Or even 100% of the time eventually, right? So the first level, we go all the way up to from here to 80, 82. That's where the CME gap is. Bang, we fill that CME gap. Then we start getting onto on-chain level. So the on-chain level, which is probably the most important on-chain level, is also 82 to 84, which is very close to that CME gap. Why? Because that is the short-term holders' profit and loss on Bitcoin. What do I mean by the short-term holders' profit and loss? The short-term holders have a profit, a level. When they get back to that level, they may decide to actually take profit or to actually cut their losses and say, you know what, I was down, I'm now back in the green, let me get out. So I think that there could be a little bit of resistance at the 82 to 84 level. Now, I wanted to show you how beautiful this chart actually is, right? So I said to you, no resistance until the CME gap, which is, let's just be accurate about the CME gap. The CME gap is, where is it? That CME gap is between 80 and 82. But then there's that 84 level. Now look at that 84 level on the chart. That's that level over, it's that level over there. That's quite a key level on the chart, right? That is the short-term holder level. So if we go up and we break the bear flag, small resistance at 82, CME gap, I think that's going to go through like a knife through butter. Then 84, little bit of resistance, and then I think we shoot straight through to 90 because that's where we came down from and we broke down within 7 or 8 days. So that's my base level. That's my base thesis right now. And then after that, we get, or before that, sorry, we get the bull market support band. The bull market support band is at 82. Also quite a key level. So the CME gap and the bull market support band, more or less at the same place. The ETF and the short-term holder basis, 82 to 84,000. Once we break through that, then I think we get to 90,000 pretty quickly. But again, it only happens if we break above this bear flag and we close above the bear flag. If we continue this pattern over here, this one that goes, if we continue that pattern over here, then as I said, I see. Let's go back down to 73. Let's touch this. You can do this by going on to the 1 hour. Touch this on the 1 hour, and then let's see if we can continue up. I suspect that's the base case. I think we're going to sweat a little bit more. You can see it's 73, 790. I think we're going to sweat a little bit more sweat on our brows. And then at 73.2, 73.1, we get this little bounce and we basically go back up. And that's the base case. Now, let us talk about tomorrow, because tomorrow is actually quite a big day. And I know you're thinking to yourself, no, it's not a big day. Why is it not a big day? Because it's the FOMC and everybody knows that Powell ain't reducing rates. So guys, it's not about whether Powell reduces rates or doesn't reduce rates. That's not what tomorrow is about, right? Tomorrow, because it is a quarterly FOMC, we get this thing called the dot plot. The dot plot tells you where the members of the Fed believe that interest rates will be for the rest of the year. You see, like, so 2026, 2027, 2028, right? Each Fed member or each governor is given a dot, and he's allowed to plot one set of dots over here. And they say to you, where do you believe interest rates will be at the end of 2026? And you basically plot it on a dot plot, right? This is the thing that can scare markets tomorrow. And the reason why I say this is because I saw this tweet over here which says the following. It says, Bitcoin pumped to 75K today, up 25% from the February lows. Chart looks like a clean breakout above the range. But here's the thing. FOMC decision drops tomorrow. Bitcoin dumped 7 out of 8 of the Fed meetings in 2025. The pattern has been rally into the event and sell the news and repeat. Okay, now the difference is that this time Bitcoin's breaking out of a 6-week range, heading into a decision instead of chopping inside one. Okay, now it could be different. Sorry, give me 1 second. I'm getting some stuff here from the researchers. Let's just have a look here. Hold on. Hold on a second. Okay, so I've dealt with that. Okay, so this time we're going into the FOMC. And the one thing that kind of makes me nervous is the following. I know for sure Jerome Powell ain't decreasing interest rates. He's not going to do Trump that favor, even though Trump's already been screaming at him on social media. But because of the war, I think that these guys might leave interest rates higher for longer because they're scared of inflation. So you remember, tomorrow, a bunch of Fed people walk into a meeting, and the question that they're asked is, are we going to reduce interest rates in the next 6 months, 12 months, or until the end of the year? The question then they start to mull the question. And when they start mulling through the question, they go, hold on a second, there's a war. The war's increased the oil price. The oil price will filter into plastics, into heating, into transport, into manufacturing. There's no end of the war yet. Then they've got to make a decision. Are they going to err on the side of caution and say, look, given the fact that there's a war, we don't see interest rates reducing? Or do they say, oh, this war is going to be over? If you were a Fed chair, and they're known to be quite conservative fellows, right? Then chances are you'd say, look, we're in a war. Chances are let's rather be conservative here. I'm worried that this dot plot tomorrow scares the markets, okay? So tomorrow we watch out. If the dot plot is scary, it's going to scare the markets. That's basically what's going to happen. I'll be here tomorrow. I'll be bringing you the FOMC. I'm not sure I'll be here live, but I will definitely be at some point. In the meantime, what's my strategy if we actually do break through this flag or above this flag? And that is basically a very simple strategy. You don't have to be a genius. Okay, you see, we are pulling down to that 73,100. I really want to watch this. Here we go, 73,450. My bet is that we're coming down to here. We're coming down to 73, or maybe 72,850. That's my bet, and that's the level that you need to watch the bounce for. If we break through the flag, then you know what I'm saying. Something very, very, very simple. If we break through the flag, then I'm starting to buy altcoins, but I'm not buying any altcoins. I'm buying the good quality altcoins, because then I'm preparing myself for a rally. Now, a lot of you are saying, well, what are the good quality altcoins? So unfortunately, I'm not going to come here and say, give you like alpha that you haven't heard before and say, you got to buy this altcoin and that altcoin, because that's just part of the cycle. You literally just got to buy the best altcoins out there, like things like Bitcoin, ETH, Hype, Sol, Zcash, Tau, Sky, Canton, Near. Those are the ones that I'd be buying. Why? Because what you can see is that these guys are like 100% off the bottom, 37% off the bottom, 90% off the bottom, 89% off the bottom, 155% off the bottom. We caught most of these on our in front runners, and we're just going to hold this, because if the market comes down, I don't mind holding any of these until the next cycle. If the market doesn't come down, I actually want to add one more in here, and I think I want to add in NEAR. I think NEAR is very, very, very undervalued. Tweet mark this, or whatever what do you call it? You tweet stamp it. NEAR USDT. I think that this is a good opportunity to be buying NEAR if we break through at about 143, 150. You can see. Remember, I started trading that Bybit portfolio not so long ago, and I said, look, I'm buying this because I'm buying ETH, NEAR, Zcash, and Solana. You can see the portfolio is doing very well. Like that portfolio started with like 34,000, and now it's got like probably 60 or 50,000 or something like that. So just buy the good stuff and just hold the good stuff, and then let's wait to see what happens with this break of that flag. You got it. All right, it makes sense. Now listen, just quickly, a shout out to a couple of our sponsors who have given you unbelievable deals. Quickly, a shout out. So I just want to show you 2 or 3 deals which I think are very good. In fact, they actually all exchange deals at the moment. So 𝗏𝗏, sign up. There's a trading competition that starts tomorrow. Sign up, join the team. You can win a whole lot of money in the trading competition. But more importantly, we'll teach you guys how to trade in a bear market. And you can claim $1,000 open position on any token. Same thing with Bybit. So you get a $50 voucher as well, which you can do at 20x leverage and open a 1,000x position. There's a video here that shows you exactly how to claim your $1,000, and you can trade oil, etc., etc. And BTCC is back, and what they're saying is, no matter what amount you put in, up to a certain amount, we will give you 10% trading bonus on that amount. So if you put in $10,000, you get a $1,000 trading bonus, and then you can just withdraw your $10,000, and then you can carry on trading the $1,000. Very clever, but don't tell them Rand told you that. All right, my friends. I will see you guys again tomorrow. Hopefully it's another green day, 9 green days in a row. Hopefully we follow that pattern. See you guys again tomorrow. Until then, trade well, friends.